Okay. So we might even be live right now. So we should be live right now. So welcome back to the Chipro Factor. Welcome back to the Crypto Factor. These things happen live, and the reason I am stuttering, the reason I'm like this is because I'm very happy to have my good friend Dan from the Chart Guys. It's been a minute, it's been a while. Dan, thank you so much for coming on here to talk about technical analysis and your thoughts and all that good stuff.
Absolutely. Glad to be here. Thanks for having me.
Welcome back. And we're going to be talking about technical analysis, day trading, no, not short, maybe swing trading is the word for longer time frames and so on. I'm really excited. I have a lot of people asking me on this channel, Dan, how to trade, how to do the best trades, what they need to learn, what are the basics. And in case you don't know who Dan is, shame on you. Dan is my favorite chart analyst, my favorite day trader. He is from the Chart Guys. You can see the links up above and down below in the description. And you can even see his interview, my very first crypto interview I ever did for the Crypto Factor book, which is right there. So you can check that out after the video. Man, it's crazy. Surreal moment, man, actually.
It's been a while. We're soon it'll be a decade where we're looking back on.
Yeah, it will be. It will be. And you've changed. I think you got your a new house, a new place.
Yeah, moved. When we were back in the day, I was nomad. I was bouncing all around and traveling and staying a couple months at a time, but settled down, put some roots in, and now I'm living in a house, got a big garden, and stationary for the time being.
And you still do the farming and everything and all the nature stuff, which is awesome, right?
Oh yeah, I love it. Have to balance. When you're staring at the screen all day, you have to have that outdoor balance.
Awesome, awesome. And I'm going to have people asking you questions AMA style here on the channel. So towards the end of the interview, or maybe in between, I might have some questions for you and so on that we can ask. But let's start with the basic that most people maybe don't understand. What is technical analysis? Why is it important in crypto?
So technical analysis is just a way of visualizing price data and putting it on a chart in front of you, because otherwise you're just looking at either a line chart, on your cell phone. It's just a way to visualize information. And when you have that information, there's indicators that you can add to it that are based off of the different price information. But really what it tells you is what is the price doing? Is it going up? Is it in an uptrend? Is it in a downtrend? And these are very important things that we need to know, because obviously we don't want to be entering things that are in downtrends, and we want to be ensuring that we stay in things that are in uptrends. So it's a way to just visualize data that helps us make decisions.
And I think a lot of questions I get is, what about all these candles? I think Steven Nissan actually found out about the candles, the actual candles and everything, bought from Japan. I think it's Eastern technical analysis. We use Western technical analysis, but now it's kind of like integrated together. So tell us a little bit about candles. What are all these things people see on their screen? Not visualize, let's not show them, let's just talk about them a little bit.
Yeah, I love the history behind it. It did come from Japan back in the 1800s. And the fact that we're using something in such a technologically advanced day and age that was created hundreds of years ago, and it works, for me, I think that's really awesome. But it's essentially, a candlestick is just showing you where the price opened at a certain point in time, the highest level that was hit, the lowest level that was hit, and where it closed. And you can have a daily candle that represents one trading day of action, or you can have a 1 minute candle that represents 1 minute of action. So cycling through the different time frames is an important skill to learn, because otherwise, and newer traders will certainly realize this, it gets overwhelming very quickly. And being able to understand how to cycle through these different time frames really can help organize things and help with clarity.
And not only that, you know when to enter, when to exit, and most of the time you're in profit, but you also stay safe if you're using technical analysis, especially if you're trading crypto, correct?
Oh yeah, crypto, as we know, is very volatile. And I love stop losses. I love knowing exactly how much I risk on any decision that I make. If I'm going to make an entry, I have a stop loss on every single trade, and there is never any uncertainty or doubt as far as, am I going to screw up my year on this trade? I know exactly what I will lose if things go against me.
Okay, so if you're just joining us right now, we're talking to Dan from The Chart Guys, and I urge you to go ahead and like this video. But more importantly, if you have any questions on technical analysis, on day trading, or on swing trading, please ask in the chat. Plus, if you can hear us well, please click a 1 in the chat. If you cannot hear us, if there's something wrong, click a 2. And if you don't care, click a 3. But in general, I would appreciate it if you can tell us if you can hear us. Dan, so basically technical analysis, something we can use for entries, we can use for exits. You personally, you do this in crypto for a while now. Some advice on people using technical. You have, I think, a hodl position. You have long term, but you also trade on the side. You want to talk to us about that real quick?
Yeah, I think that's very important. If you believe in the asset, the last thing you want to be doing is buying and selling, and then you sell, and then you can't get back in, and you watch the price run away without you, and that's where you feel FOMO and you know the fear of missing out. So I personally believe in Bitcoin, and I believe in the cryptocurrency space, and I want exposure to that in long term. So I have a position that I allocate as I am not going to touch this position. If we go to zero, I will ride this to zero. And that's perfectly okay because, again, I know exactly how much money I would lose if we went to zero, but I don't touch that. And I have capital that I will day trade with or swing trade with based on shorter term market environments. You know, obviously I wouldn't want to be buying a lot back in 2018, but now here we are in 2021, a much different market environment. So I'm putting that capital to use and ensuring that I keep those two things very separate, because otherwise it can confuse you. And it's important to keep compartmentalized for me and just stay organized by having those very different mindsets on those different positions.
Great. Now, here's a question I get a lot. People read, a lot of people watch YouTubers using technical analysis. A lot of people see how people trade crypto. And the first question is, where do you do this? I mean, not a lot of people tell you, where do you get all these charts? Where do you go to use stop losses and all that beautiful stuff we're going to talk about soon? What platforms can you use? And which ones maybe you can suggest?
So for charting, I love tradingview.com, and it's free, and there are paid versions as well, obviously, but it's very user friendly. And it's just, you know, the way that you can scroll around with your mouse and zoom in and out and back and forth. It is so much more user friendly than anything I've experienced on a stock platform or on a crypto exchange as far as the charts that they provide. So that's essentially why I need at least 2 monitors, because I have to have charts up on one monitor on TradingView, because that is where it's easiest. As far as exchanges for trading cryptocurrency, I personally am on Coinbase Pro still. I don't love it. The fees are astronomical. I am patiently waiting for someone to disrupt the space and to give us lower trading fees, because, you know, trading stocks right now, I can do it in the US for $0 a trade. And it's a very different thing than having to pay X amount % for every single trade that I make, especially as a day trader. When I'm doing it so often, those fees add up very quickly. So I am on Coinbase Pro. There are other factors as to why I stay there, because of security. They've got FDIC insurance, which helps me sleep better at night. But looking forward to more and more companies trying to disrupt this space, because obviously there's a lot of money to be made. There's a lot of people interested in cryptocurrency, and we're going to see these fees drop over the next 5 years, in my opinion, as long as we can just see some competitors try and disrupt this space.
You talked a little bit about insurance. I didn't quite catch the abbreviation. What kind of insurance is this?
FDIC. So it's just insurance that ensures that if there were a hack or if there were some major catastrophe, that the exchange has X amount of funds, I believe it's $250,000 worth of capital, is insured. So if that were to be lost, you know, the exchange wouldn't just go bankrupt and disappear and then you don't have money. They have $250,000 worth of insurance to protect against that per individual.
Have you ever seen in crypto those wicks that just suddenly go down and just liquidate your price? And they're huge wicks. And I think this is what people have a lot of trouble with in crypto. How do you go around that? And have you checked out Bybit yet? Because they apparently have insurance for that. That's what I thought you meant with insurance.
I have not heard of that. But those wicks are showing you market orders, market sell orders, and then it's a waterfall cascade effect where You market sell, and then stop losses are hit, and the stop losses are triggered as market sells. So they just compound on each other, and you drop real fast and hard. And it shows you a lack of liquidity. If you've got $100 million worth of bids on Bitcoin between $52,000 and $51,000 versus an exchange that has, $1 million worth of liquidity, the exchange that has less liquidity is much more susceptible to big drops that can trigger your stop losses before turning right around and going back up. That's another reason why I'm on Coinbase Pro, because they do have a bit better liquidity than some of the other smaller exchanges.
Yeah, I had a lot of trouble doing that in the beginning when I was trying to trade Bitcoin and other cryptocurrencies. I had a problem with that getting liquidated all the time. It was just I started hate trading just because it kept happening to me. I got so frustrated and lost a lot of money actually.
Yeah, and that won't happen in the stock market on big names. You got Apple or Tesla or whatever. There's so much liquidity in those names. There's so many orders on both sides, both bids and asks, that you don't see these huge wicks that just liquidate everybody.
So I got a question for you before we actually get into showing some charts and teaching people the basics of technical analysis. By the way, if you haven't tried Bybit, Dan, I have an affiliate link down below, man.
All right.
I also have your links, by the way, if anybody wants to go check you out, or your signals and everything like that.
Appreciate that. We got a free intro to technical analysis course on our website. So everybody, welcome to try that out and see if it's for you.
Awesome. But for the sake of this interview, let's show it here, yeah? some of it here.
Yeah, for sure.
All right. Let me ask you this. You mentioned volatility and everything. What do you think of GME, GameStop, and what happened? Are you with the Robinhood traders? Are you against them? Is it a normal thing that happens in the stock market? As far as I know, it happens sometimes to stop trades. I don't know.
It's normal, but this was just blown. It was magnified. So, this happens on a scale of 1, and this was times 100. So it's a mixed bag. I'm definitely for the Robinhood traders. I'm definitely anti-suits and big establishment. And the disruption that's taking place in the trading world over the last couple of decades is just, you got your financial institutions and your hedge funds, and they want everybody to think this is too hard. You have to go to school for 8 years to learn how to do this. Just give us your money. Let us do it for you. And no, we got YouTube, we've got Google,
Yep.
We can learn how to do this. And that's what I've dedicated the last decade of my life to doing. And so I definitely am on the side of the Robinhood traders. That being said, I saw the setup and knew that a ton of retail traders were going to get hurt because I knew that we were going to top out. And if you take out, 2 hedge funds and you short squeeze them and the price runs up, there's 10 more hedge funds that are going to just jump in and short it at $200 and $300. And there's no way that retail money can outplay big money on that big of a scale.
Right. Okay, so shall we show some charts live so people can actually see in real time how you read charts? And then
Sure thing.
yeah? And then let me know when you get your charts up. All right, let me get my thing out the way here. Let me transition into here. Okay, let me just say a quick hi to Alex Brown, Demetrius D. Papa, nice to see you here, and Zorab Khan. He's like, oh wow, the chart guys are here. Okay, good, awesome, man. We're gonna be answering all your questions in a bit. So what are we looking at here, Dan? We're looking at Ethereum versus USD on Coinbase.
Yep, this is Ethereum USD on Coinbase. This is the hourly chart. So every single candle is 1 hour of trading action. And just as an example, we have, this big green candle right here. I can see that when this hour started, the price opened, and I'm looking at these numbers up here, but the price opened at 1870. The high of that candle was 1918 and 94 cents. And I can see that we closed at 1907. So essentially, it's just a snapshot little view that tells me exactly what happened during that hour of trading. And of course, if I want more details, I can zoom in to the 5-minute chart or even smaller, and that will show me more details. But what I like about this hourly chart is just it's nice and clean. You see a lot of charts that have a ton of lines on it. And if that works for the individual, then that's fine. But for me, the less noise, the better. Keep it simple. I use a few indicators. And in this example right here, this red line is an exponential moving average. It's the 12-period exponential moving average. And I just love the clarity here because we can see it's acting as support, and every time it's touched, it holds. And I can just say a very simple statement looking at this chart. If the EMA 12 is holding as support, then the bulls have complete control. And we can see every single candle, even though we are dipping below it at some points, we're closing the candle above it and keeping it as support. So it's just another way to visualize an uptrend. And we can say that when that level is lost, that it'll be a short-term shift in the market environment that will be less bullish, and it will likely mean that we need to consolidate on a longer-term time frame.
Now, right underneath that, you have another moving average. I think is a 26-day, right?
That's correct. The 26 period exponential moving average.
Now, would you say it's safe to say if those candles close below that and there's a cross towards the lower side, we would go into a short-term downtrend, or would that not apply?
That is correct. And that's why I have the 26 here. I use the 12 a lot more for the actual candles, but I like the crosses, as you mentioned. We had the bull cross here where the 12 went back over the 26. And since then, it's been nothing but bullish action. So I do use the crosses to show shifts in trends and sentiment as well.
Right. Now, you mentioned before zooming into the 5-minute and the 10-minute. Do you want to show people how to do that? It's on the top left there. You go to the 5-minute or...
There's a drop down here, and I star the time frames that I like the most.
Gotcha.
And you might have to pay for the cheapest version to be able to do that, but that's what lines up which time frames are here, so I can just easily, quickly go from one time frame to the next and see what things look like. So here on the 5-minute chart, I can see we have a tightening range where we had a big breakout, a pullback, a lower high. We're going to watch for a higher low to form compared to this 1922 low here. And it's just showing us more details. Whereas if I were only looking at the hourly chart, it's just one green candle and I don't see all that shorter term action going on.
Right.
So the time frame that you're going to look at is specifically dependent on what you're doing. If I'm a swing trader and I'm holding for days, the 5-minute chart doesn't really matter for me. The 5-minute chart matters when I'm day trading for short term action. So it's important to not focus on things that don't matter to you, because I'll often find newer traders that are swing trading. They'll be watching the 5-minute time frame and acting on that, when in reality, zoom out, because all you care about is the daily time frame, maybe the 4-hour chart. Just longer term time frames are what you should be focusing on.
Why would you look at a 4-hour chart and a daily chart, and how is one to verify the other to see if it corresponds, if you will, to your position or to what you're thinking you're doing?
Yeah, it just gives, again, more information. I pull up the daily chart here, and again, there's that EMA 12 that just keeps holding as support on these tests and then seeing the uptrend continue. But if I look at the last 2 days, I see 2 big green days. And if I'm trying to find a support level, and a support level is, the price level that was hit, the absolute bottom of that point before the bulls took control again to head to higher prices, I'm looking at that and I'm seeing 1659 is the last time we saw that on the daily. But if I want a level that's closer nearby, I zoom into the 4-hour chart and I can see that the last 2 candles here, we established a little bit of a base of support right down at 1880. And I can, if I want to use a closer level, say 1659, that's too far away. And I don't want to base any stop loss on that, because I don't want to get back, 10, 20% before we get to that level. If I want to protect my gains, I can go off a much shorter term level, and I can zoom in even more on the hourly. And I can say, yep, we've hit this level multiple times. We hit it here again and again, and it just keeps holding. So I can say that the most important short-term support, in addition to this uptrending exponential moving average, is that triple low right down under 1880.
Got you. Now, I see that Ethereum is trying to break a certain resistance, all-time highs. If that's on the daily chart, that's the hourly chart. If we go to the daily chart, it should verify. There you go. So it actually broke resistance.
Yep, we are in blue sky breakout. This is an all-time high, and the Ethereum bulls are gaining a little bit of attention. We know Bitcoin just hit all-time highs a day ago, and they're just taking turns. They're taking turns for the spotlight right now.
So this would theoretically be a good time to enter Ethereum in your
ideally, it would have been on the break of resistance, breaking 1878 and hitting a new all-time high is the time to enter, in my opinion, on this scenario, just because it was a resistance break. We're getting a little bit of follow through. But as far as, just saying, well, we're at all-time highs and I want to make an entry, that's not necessarily the best way to approach it, because again, we could very easily see even just a healthy 4-hour pullback to look for a higher low, but obviously I don't want to be buying right before that happens. So in this current setup, if I were going to be looking for an entry, I would want something closer to this 1878, 1879 support to play off of. I would want to see a little bit of a pullback, and then I can make an entry and have less risk. Because if I enter up here at the price right now of 1935, I have a pretty significant amount of risk before I would stop out if this level of 1878 were to break. So I prefer personally, when I'm making entries, I like the risk and reward scenario better when I'm making entries based off of support as opposed to making entries on resistance breaks.
Okay, got you. Now let me ask you this. Let's say you just had somebody come in and he's brand new, doesn't know what technical analysis is, and you had maybe some time to explain to him how to use this chart, how to read this chart, and how to day trade on this chart. How would you go about it? Can you do it now?
Well, the first thing I would say is this takes hundreds and hundreds of hours to be able to utilize technical analysis as a skill to improve your trading. So that's one thing that loses a lot of people. You know, I have friends that message me and say, hey, I'm really interested in this. And I just send them to our free course and I say, watch this course, watch this 5 or 6 hours. And if you want to go further after that, come back to me and I'll give you more information. And half the people don't come back because, again, they don't want to put in that time and commitment. And that's certainly understandable. Everybody's got their lives and their families and their jobs. And it is a very significant time commitment where the better you're going to be, the more time you need to put in. So at this point, I'm over 10,000 hours in, which at this point, I feel I'm mastering this skill to a certain degree. So I would just say, keep it very simple and, you know, put the education in, take the free courses, watch the YouTube videos, and then observe. You have to observe and learn lessons to yourself. You are going to lose a lot when you start this game, and you have to learn those lessons. You know, I can say to 100 new traders, use a stop loss on every single trade. And I've learned over the years that no matter how many times I say that phrase, there will still be a lot of people that do not use stop losses because they have to learn the pain in their stomach for themselves of what happens when you don't use the stop loss and the trade gets away from you. So it is a ton of time being put into content that is readily available on the internet, both paid and free. And it is then experiencing it for yourself and practicing and staring at these charts and watching how the price action trades and cycling through the different time frames, the daily chart, the hourly chart. One thing that I find easy to explain to people, when you're in a bull market, the RSI indicator hitting oversold conditions is generally a good time to buy. So that has been the case time and time again, where let's just go back to Bitcoin real quick. After you hit an all-time high, the first time you hit oversold conditions on certain time frames are good entry points. So Bitcoin hit an all-time high at 49,700 a couple days ago, and we then pulled back pretty hard. You know, we ended up dropping very quickly, and we pulled back 8% from that high. But we hit hourly oversold conditions, and when the price was down at the low of this candle, the RSI here was under 30, and that was your best entry point anytime in the last few days as far as when to enter. So if in a bull market, watch for the RSI to get oversold to be looking for bulls to buy those dips.
Does it also apply for overbought the other way around, or is that only in a bear market?
In a bear market, it is much more relevant. When you're in a bull market, when you're in blue sky breakouts, the RSI being overbought can be useful, but there are many instances where it can stay very overbought on those moves up.
Got you. What about volume? Does volume apply to cryptocurrency? I don't know if you ever heard this guy called, oh my God, what was his name? It was funny as hell. Anyway, he was always shout, volume, where's the volume? Volume!
Volume is big. Volume, I call it the prove it indicator.
The prove it indicator.
I need to see the volume behind the move to believe that it's going to get any follow through. So bulls always want to see increasing volume on the way up. And let's just zoom in here. Here was Bitcoin hitting a new all-time high. This was maybe yesterday afternoon, probably just about 24 hours ago. And these little candles show us increasing bull volume on the way up. If you are a bull, that's what you want to see. You do not want to see increasing bear volume on the way down. because again, it just shows us supply and demand. And we know if there is increasing volume on the way down, that shows us there is more supply of coins being sold into the market than there is demand for coins buying. So it is very important to pay attention to volume in both directions.
Nice. I'm gonna ask you a few more questions, and maybe you can show us your some of your own technical analysis and talk us through some swing trades on certain coins,
Sure
just like
thing.
you do on your show a little bit, and maybe you can do that for us, and maybe some short term so people can see kind of the difference. So, is that okay, by the way?
Yeah, definitely.
See, that's how you know
So
when
I
there's a
will
real
go
trader
over.
in the house, right? There's a real trader in the house when they go, yeah, sure, I could do that. Who you?
So I will go over Litecoin. Litecoin was a recent trade that I took based on, well, I don't want to get too complicated, but it was actually based on the pairing with Bitcoin. Let's talk about that real quick. So you have two charts. You have a Litecoin US dollar pairing chart, and that's showing me what is the price of Litecoin in US dollars.
Mhm.
And then there's another chart where I can look at the price of Litecoin comparative to what Bitcoin is doing. And
Okay.
that's going to show me, who's stronger, who's going up faster. Is it Bitcoin going up faster or Litecoin going up faster? And if the LTC BTC chart is going up, like it was on these two big green days, each of these candles is one day, that shows me that Litecoin for these 2 days was outperforming Bitcoin, and it was a big move to the upside. So I saw this chart and I was watching a pattern, and this pattern is called a falling wedge. And essentially, it just shows you a constricting range of lower highs and lower lows, but it just shows you bears getting exhausted because you see lower lows without much follow through, and then eventually you break the pattern
Hmm.
bullish. So I was watching right here, and this day is when I entered Litecoin because it was on the verge of breaking this pattern bullish, which obviously it did with some nice follow through. And at that point in time, on February 12th, the Litecoin US dollar chart on February 12th was right here. So we had already been running up for a few days, but I was just viewing this as a couple day trade. I knew I wasn't going to stay in this for weeks. I was just going to maybe hold overnight, and entered because of that move. And then obviously we saw some decent follow through. So I ended up entering at about 96, and I just scaled out into strength. And what I mean by scaled out is, let's say I enter 100 coins. Maybe I'll sell 20 coins. If I enter 100 coins at 96, I'll sell 20 coins at 200. I'll sell 20 coins at 205, 20 coins at 215. I'm scaling out into the strength
Hmm.
rather than trying to nail the top and bottom. I know I'm not going to be nailing tops and bottoms. Sometimes you do, and that's great, but I certainly don't expect to on every trade. And so that was one way that I ended up holding the position overnight, and eventually I exited it when we started to see this pullback. But again, look at that daily EMA 12. It's just such a great
Yeah.
visual guide where when you're in a strong uptrend, you bounce off that EMA 12 support. And it's a good confidence builder where, again, simple statement. If Litecoin is holding the daily EMA 12, we are in an uptrend and the bulls have control.
So I'm gonna ask you. So can we look at some coins that my audience I know they're gonna ask, and maybe if somebody asks a few more coins, maybe we can have a look at them as a swing trade position. What you think, is that okay?
Absolutely.
All right. So SNX would be one. I know that will be it. I know ADA would be one.
Mm-hmm. So right
Cat.
now, what I see on SNX USD, I can see the last time we consolidated and set a daily higher low was down here at $18.
Mm-hmm.
And we'll just put a line there. So again, the price came down, it hit 18, and then it bounced back up to hitting higher highs. So I know that $18 level is now a support level that I care about. From there, we hit new highs, and we're now clearly consolidating. The highest price that we hit was 29, and we've now pulled back for about 4 days at this point. I would still consider this a daily uptrend at this point because the higher lows are not being lost.
Mm.
One thing that does stand out to me on today's candle, again, the EMA 12, this red line, look how long we've been holding it. We've been holding this EMA 12 support for essentially almost a month at this point. And even the last 3 days, we've dropped, but we keep bouncing up and we keep holding this level. But that might be changing today. So that would make note. I would definitely make note of that, and it would stand out to me if we were to close under that EMA 12 support, which right now is in the mid $23 range. That would just be a little bit of a red flag to say, okay, we might be seeing a shift in the market environment, and it might be time to zoom out to the weekly chart and to be watching for weekly consolidation. And I look at this weekly chart and say that as long as SNX has been listed on Coinbase, this is the Coinbase chart, which has been what it looks like 2.5 months, we have not seen any weekly consolidation. So if I have some nice gains, this tells me, okay, maybe I want to protect some of these gains because we could easily pull back into the teens. And at that point, we would look for a new weekly support level to be established because we have not established any weekly support in the last couple of months. So what I would not want to see as a bull is a level hold, a new price level, a bounce up and a failure to break 29 and then a drop down to a lower low. Because at that point, we change from an uptrend of higher lows and higher highs, and we shift to a downtrend of lower highs and lower lows. So that is not happening yet, but that is something that I would be keeping an eye out for that would tell me if that happens, yes, weekly consolidation is now underway.
Where would you look for an entry point on this one if it starts going down?
So we have a support level right now from a couple days ago. We dropped down to 2114. So I can see that that is a clear support level. And I would zoom in and say, okay, what's the 4-hour chart doing? Because I know the bulls need to regain the 4-hour trend with a higher low and higher high to be back in short-term control. So I see the drop down to 2114. We topped out at 2694. We then held a higher low. And this is what we call an equilibrium pattern. So an equilibrium pattern is a tightening range of higher lows and lower highs. And eventually you get to a point where it gets so tight that one has to break. We're either going to break the lower highs and see a bull move up, or we're going to break the higher lows and see a bear move down. So if I want a nice risk to reward entry, I would be looking for an entry right about now. And I would be playing off of this support. So let's just say I enter right now at 2306 and I put my stop under 2225. And I always want to give a little bit of wiggle room, because if I want, the last thing I want to do is put my stop loss at 2224 and we hit 2223 and then start to bounce, because that's pretty much a double bottom off that support. So let's say I enter at 2306, I put my stop loss at 2210. I'm risking just about $1, and I know I want my reward possibility to be more than what I am risking. So the ideal scenario would be the bulls hold this 2225 support. We then bounce up and either break that 2468 resistance level to then change the trend, because right now we're in a 4-hour downtrend. And if that bull break were to happen, we would enter a 4-hour uptrend with the higher low and higher high. And if that doesn't happen, what I would want to see is a tightening 4-hour range that eventually breaks bullish. And in both of those scenarios, the reward to the upside is more than the risk. So again, the risk is just under $1. And if we were to break 2468, the reward is at least 160 from where my entry is. So that's how I position what my risk is, what the possible reward is. And I generally always want to have roughly at least twice the potential reward for what the risk on a trade is.
All right. We have a world famous singer here called Clady, which is actually watching your technical analysis right now, giving you thumbs up. He's buying SNX.
All right. This is not financial advice.
And he typically gets over 75 million views on his music videos. So this is a very good thing. So there you go. We have a famous person in the chat. Thank you, Clady, for being here, by the way. He wants to learn technical analysis, by the way. I talked to him a couple of times. He wants to learn. Let's talk about something else. Let's do a little bit of a swing trading perspective on what you think. Let's break some hearts, or maybe make people happy. What do you think about XRP, and where do you think it's going?
So I know there's a lot of drama around XRP. There's a lot of haters out there. There's a lot of bulls out there. For me personally, I'm aware of all of that. But for me, it's just noise. And I disregard it to a certain degree. I don't care. In many instances, what I'm trading, whether it's a stock or a cryptocurrency, I don't care what it's doing when I have that short-term mindset. I don't care what the company does.
Yeah.
And all I care about is what the price is doing. If I can make money on a company that sells cookies, then great. So
Yeah.
on a chart like this for XRP, we can obviously see the resistance level, and it's going to vary depending on what exchange you're looking at, because when things get really volatile, different exchanges hit some different price levels. And again, that has to do with the liquidity of the exchange. But I can see that we had a clear top at 70. That's not where it is. A clear top at 78.
Yeah.
And then we failed to break that on this last push that we had up to start February. So it's very clear to me that that is the long-term resistance level, and that's the cap on the price right now, because if we can't get over that, then obviously the price is not going to go up much at all. So that level is the most important resistance. Aside from that, looking at this daily chart, I can see that we also have a key resistance at 64 cents. It was all bulls controlling the price for day after day after day. We hit that price, and then the bears have had control since then. So at this point, we are still in a daily uptrend. I see the pullback down here to 34 cents. So that's a support level. We then saw another higher low at 38.9. So that's a support level. And on this current pullback, I would say that we are just looking for another daily higher low to form. And what the bulls do not want to see is just what I showed on that previous chart for Litecoin. They do not want to see a failure to break 64 and then a drop down to break this low of 48, because again, that would shift the trend from being in an uptrend of higher lows and higher highs, which is what we have been in over the past couple of weeks. And that would shift it to a lower high and then a lower low. And then we enter a downtrend, and that shows us the shifting momentum, and it shows us bears having short-term control. So I would say the key support in the short term is 48 cents. The key resistance is 64 cents, but the resistance is up here in the upper 70s.
So for a long-term position, would you wait for it to break that resistance on the upper 70s? Is that where you would consider and holding above that price?
At this point, yes. At this point, looking at the double top rejection, seeing that the price, went up 500, no, not that much, 400% or so to even get to that level where it then rejected from, and seeing that we have not seen weekly consolidation yet from that rejection, I personally would be patient in this range, because when you have this much volatility, again, back to that equilibrium pattern, you often see them form after massive volatility. So we've got a high, we came down and hit a low, we've got a lower high, and I would be watching for the potential that we need to pull back and set a weekly higher low compared to 17 cents. Again, when you run that hard and that fast, you oftentimes have to chill out for a bit and establish a new support level. So I personally would be waiting for a weekly higher low, maybe playing off of 17 cents or a break of that 78 key resistance.
Let me give a good example, or let me ask you about an example with fundamentals and charts, because a while ago when the SEC news came out that they are suing XRP, and soon after that there was delisting of exchanges, I actually, before even this happened, I saw on the charts that we broke a certain support level, and I actually got out of my XRP position and got into SNX, and I made a video about this. And then once I heard the news, which came after the charts, there's that saying, show me the charts, I'll tell you the news. Essentially, I assumed, okay, this is happening with SEC. Exchanges are in scrutiny right now. They're probably going to start delisting XRP. Now, most of them suspended XRP, some delisted XRP. There was a whole lot of FUD. Obviously, XRP kept on going down. A lot of people held on to XRP while all other cryptocurrencies were going up. And I said that I'll get back into XRP if A, I have clarity on what's going on with the lawsuit. What exactly is this lawsuit? When is it going to happen? Or is this news going to die down over time? And break resistance. But my resistance wasn't at 70 something cents. My resistance was around 60-ish. I was ballparking it. Would you say that's a good way to use fundamental, if that's what it's called, or macro analysis with technical analysis? Would you agree with that?
There's a spectrum where on one side of the spectrum you got fundamental analysis, and the other side you got technical. You never want to be fully on one side or the other. It's always a blend. So I would say I'm maybe 85% technical and 15% fundamental. Someone else out there is the opposite, 85 fundamental and 15 technical, and it works for them.
Yeah.
So there are many different ways to utilize both in unison with each other. And I'm glad to hear you got out, because that sounds like a great example where little bit of early warning. And that's the other thing. We have inside information, which oftentimes can be seen on charts before the news is actually made public.
So you, and if you want to talk about this, if you were trading XRP, would you be getting back in? Would you be staying out in general? With everything you've heard, everything you've seen, all the drama and everything, would you not touch it? Or would you just look at the charts? Would you get back in at some point? What would you do?
So for me personally, there's too much other opportunity out there
Yes.
for me to spend time on XRP, and there's just too much drama. You know, if everything's going up and there's significant gains out there in Bitcoin or ETH, that's where my focus is going to be. And there's definitely a lot of volatility in XRP in both directions. So, you know, someone who is dedicating a significant amount of time to just this coin can definitely make a lot of money trading it. But as someone that has my eyes on stocks and on crypto and on, you know, the marijuana sector, I'm all over the place. So I just don't have time to devote as to what would be needed to follow all the news, essentially.
Okay, let's talk about another play. As far as technical analysis is involved, or what do you think of ADA, Cardano? What do you think ADA is going to do?
So
and
it's
give
been
us a
strong.
time frame, a month, 2 months, because, you know, people need to know this.
So right now I am looking at a key resistance test that currently rejected the price. So this is the daily chart, and it actually reminded me a lot of the Binance chart, which we'll look at in just a second and compare it. But we hit a high and we pulled back for a few days, and we're looking for a daily higher low, because the last daily higher low that we set was down here in the 30s. So we ran 200% with no daily support established. So that's what happens when you run really fast. You pull back pretty hard, and we ended up pulling back, you know, 30 some percent, hit a support level at 6856. So keeping it very simple, the two most important levels to me are 98-cent resistance and 68.5 cents support. What I see happening right now on today's action is an inability to break resistance, at least on the initial attempt. Again, I want to zoom in and get a little bit more details. I can see the 4-hour chart is still in an uptrend. So there's no major red flags. That 98-cent resistance is still in play if the bulls can establish a 4-hour higher low and, you know, try and make another attempt at that level. If we were to lose the 4-hour uptrend, let's say we pull back a bit more and again fail to break the recent high, confirm a downtrend, at that point in time I zoom back out to the daily and say, okay, we're probably going to trade within this tightening range for another week or two. And so that would keep me patient, and I would want to see enough of a pullback again to where the risk, if I'm going to be making trades based off of this 68.5 cent level, I want to see a pullback that is significant enough where my risk would be much smaller. Because if I enter right now at 90, 91 cents, the level that I would use to stop out is way down there in the 60s. I would be much more comfortable either waiting for a resistance break or entering closer to that 685 support, so my risk is smaller. Overall, it's definitely a very bullish chart. You know, the weekly time frame has been exploding along with a lot of these other cryptocurrencies. And let's just look at Binance and compare it real quick, because Binance has been on a nice all-time high run, and it had something very similar.
It caught me off guard.
Yeah, it was big and fast.
Yeah.
But it was the big bull move, the consolidation where we had to pull back a little bit more sideways here, which is what the bulls want to see. Again, you don't want to give back gains. So the more sideways consolidation you can see, the better. But we established that higher low and then saw continuation. And I actually haven't looked at this chart in a day or two. That is big time follow through. So that is what the ADA bulls want to see. They want to see the established support level and then continuation. The biggest difference between the two is the size of the pullback. Binance from its high pulled back and hit this support level at 20% pullback and then saw continuation. Again, for ADA, we pulled back more. We pulled back 30%. So it's harder. It takes more, it's more ground to cover for the bulls to get back to that recent high than it would be for that Binance chart, just as an example. So the size of the pullback matters. You know, so a chart that pulls back 10 to 20% is going to have an increased chance to see higher highs and continuation than a chart that pulls back 30% plus. So that's where that possibility of the inability to break resistance and potential tightening range may come into play because of how big that initial pullback was.
Got you. Okay, let's do Hex because we're gonna have Richard Hart on Sunday talking about Hex. So I'm gonna show him your analysis.
All right. So Hex, I want to go to the weekly chart. So one thing that I can see is, again, a lack of liquidity. Let's go back to the daily. I can see a lack of liquidity just because of all these wicks,
Right.
where we're seeing a lot of movement, a lot of range, and that just shows me there's not as much volume. And then I can zoom in and see, how much dollar volume is being traded, and it's not even comparable to a lot of the other coins that we look at. So just looking, whenever I'm analyzing something new that I've never looked at, I start on a longer term time frame first because I want the big picture. I want to know what the weekly chart is doing, and then I can zoom in for the details. But I need to zoom out first and get that initial standpoint. So we hit the high here up at 19.4, and again we pulled back very significantly. So because we pulled back so much, the odds, the probability that we're going to just go straight to a higher high is much less. We pulled back 68%. So we can anticipate that even though we're making a bull move up, that the probability of breaking that resistance is not high because of how much we did pull back. So here's another scenario where we have our high, our low. Our lower high is looking like it's being set here at 15.9. And right now, if I were looking for a bullish entry, I would be looking for a higher low compared to this 0062 level. That is the most important support level to me, because if that level were to break, we go into a downtrend with a lower high and lower low. So that level must hold for the bulls to keep the higher lows coming. The hallmark of an uptrend is higher lows. And if you lose them, it's a shifting market environment and the bears are gaining some control.
And this is just with charts right now with price if you're trading, right? So people have to keep that in mind. It doesn't take into account if you get awards or if you're staking or anything like that. Yes, just to make it clear.
That's correct.
Now let me ask a couple of more coins, and I'm going to ask you. Let me ask you a couple of coins more. What do you think of DNT? I don't even know it, to be honest with you.
DNT.
District OX. Oh, I hear about this all the time, actually. District OX, I do know it.
So it's made some nice moves. Again, it's in an uptrend. We hit a high up at 422. We pulled back and set a daily higher low of support. And again, after your volatility, here's our tightening range where we've got, let's zoom in a little bit more. Let's go to the 12-hour chart where every candle is 12 hours of trading. We hit our high, we hit a low. Again, look at the 12-period EMA, this red line, holding as support, holding as support, holding as support. But we hit the high, low, we hit a lower high, and now we're looking for the bulls to maintain 2707 support. That's the most important level for me, because if that level were to break, we would go from being in a daily uptrend to then entering a daily downtrend. So I can say as long as 27 holds, we are still in a daily uptrend, and we have a tightening range forming as the 12-hour chart shows us. We can see big candles, big volume, big ranges, and now we're seeing smaller and smaller candles, smaller volume, and that's the normal price action that you see after high volatility. The volatility shrinks, you enter an equilibrium, the volume drops off, and eventually you reach a point where you can't get any tighter, and you eventually see a very clear bull break or bear break, and the volume goes up again and spikes when that break takes place.
So what kind of percentage would you give to this going up, and what kind of a percentage would you give this going down here?
Well, first I want to check and see what the Bitcoin pairing chart is doing to show me how is it trading comparative to Bitcoin. And I can see that it is in a tightening range here as well. They're pretty much the exact same charts on the US dollar pairing and on the Bitcoin pairing. And that's what you want to see. When you are in an altcoin, you want to see the Bitcoin pairing doing the same thing as the US dollar pairing, because it can show you that it's outperforming Bitcoin. And again, it's just that spotlight of attention. So I would say that this is still bullish. The trend is your friend as long as those higher lows remain. If this Bitcoin pairing chart were to break this low of 583, that would be an initial little red flag for me. So if that level breaks, then even if the US dollar pairing is still holding 27 here, it's a little bit of a red flag that we might be losing favor and that Bitcoin is showing us more strength. And that essentially just tells me the spotlight is dimming. There's less attention on it. And at this point in time, this is one of those setups where I would be looking for a potential bullish entry off of this support level. And ideally, obviously, hoping that the uptrend continues for this tightening range to break bullish. If Bitcoin were to, fall off and start daily consolidation, then we're going to see the altcoin space. Most names are going to consolidate with it. So Bitcoin is always a factor in my altcoin analysis, but Bitcoin's not giving us any major red flags. We're just coming off an all-time high. There's no big bear volume. So I am bullish on this coin as long as 27 cents holds.
Have you noticed that altcoins are thriving while Bitcoin's going down lately after it goes up and it consolidates?
Absolutely. This is a Bitcoin dominance chart, BTC.D. And this shows us what percentage of the entire cryptocurrency market cap from the major coins is Bitcoin. So when we were up here at 73, that's 73% of the market cap is in Bitcoin. And now we're down here at 61%. So because we've dropped 12% here, that tells me that the market cap of the altcoin space is growing relative to what Bitcoin is doing. So the fact that we're in a downtrend on this chart shows me that the altcoins are outperforming Bitcoin as long as we are in a downtrend. Now, right now, over the past couple of weeks, we're in an interesting point here because things are tightening up. And if we were to see a trend change with a higher low and a higher high, that would show me, okay, now Bitcoin is getting attention again, comparative to the altcoins, and is seeing its market cap increase compared to them. So that's something I watch for on this dominance chart to know, should I be focusing on Bitcoin? Should I be focusing on the altcoins? And again, over the last month, 5 weeks, 6 weeks, it has been better to focus on the strong altcoins than it has been to focus on Bitcoin because they've been outperforming.
Now, that said, I remember in 2017, while Bitcoin was in an uptrend, it was going up slower, but altcoins were going up faster. So it is still possible for altcoins to go up faster, even if Bitcoin's going up slowly, right?
Absolutely. And that's what's been happening. Bitcoin is hitting all-time highs, but this chart is dropping. So that tells me Bitcoin's going up, but the altcoins are going up faster.
Got you.
Now, likewise, just to clarify real quick, the opposite can happen. Let's say Bitcoin drops 10% tomorrow and the altcoins drop faster than Bitcoin. This chart will go up because it's showing that money is leaving altcoins faster than it is leaving Bitcoin. So the Bitcoin market cap is going up relative to the altcoins. So even though Bitcoin, essentially I should say that this chart can go up, Bitcoin can gain dominance, but it doesn't mean that Bitcoin itself is going up.
Got you. Okay, I got one more coin from the chat. By the way, really fast says thank you for the DNT analysis. I got one more from the chat, and if no one else asks, I'm going to ask you one more question after that. And that is, and I've never heard of this coin, to be honest with you. It's called Celo by Deuce 2119 Soto. Fair enough. Celo coin, CELO.
All right.
Oh, it's there.
So uptrend certainly intact at this point. We had a bull break of 598, but this big upper wick shows me profit taking. So I zoom in. This is the daily chart that I'm looking at, and I zoom in, and I can see that that's happened in the past. There's definitely profit taking candles where we then tighten up a little bit. But what it shows me is every time we see one of those big upper wicks showing profit taking, we generally pull back. There's 3 instances: big upper wick, and then days of pullback. Big upper wicks, days of pullback, big upper wick, days of pullback. So if today's candle closes with that big upper wick, the pattern would be to be watching for a few days at least of some pullback. So I zoom in from there, and I can see that this is just, again, a lack of liquidity. So this is just one big spike up, happened real fast. And if we look on the 5-minute time frame, we can see that it was a 10, 20% move here just on one 5-minute candle. 20% on one 5-minute candle. So again, a lack of liquidity. And after that surge in buying pressure, the buying pressure then goes away and we slowly fade back down. So what I would do from there is then look back at the previous examples and say, okay, the big upper wick. So what I would be watching for right now is an hourly high or low, anything above 453. If we lose the hourly uptrend, let's say we pull back, set an hourly high or low, fail to break the high because of how high up it was, and then confirm an hourly downtrend, that would tell me, yep, we're going to see days of consolidation just like we've seen in the past because of a lack of follow through. So a big surge of bull volume for a very short period of time gets a big reaction due to a lack of liquidity, but a lack of follow through means a couple days of sideways trading while the price then sorts itself out, so to speak.
Okay, let's talk about these. You keep on mentioning lack of liquidity. Can you explain to us on those wicks? Can you explain that to us, please?
So a lack of liquidity. So let's just say that, I'm trying to give an example where I usually give examples of apples. Let's say I'm going to the farmer's market and there's 100 apples in the entire farmer's market, and I am looking to buy 100 apples. So I can buy up every apple, and then there's no liquidity because I've bought up all the orders. So when this big spike is taking place, every order between 550 and 660 has been bought up, and there are now no more orders there. And let's say I go from that apple farmer's market in a town and I go to the grocery store in a big city. There are now 1,000 apples in Whole Foods in New York City. And I want to buy my 100 apples. I buy those 100 apples. There are still 900 more apples to go. So my impact as an individual on the market is not as significant because there is more liquidity of apples out there. So when you're on a bigger exchange and you have more participants, more people with bids, more people with asks, you have more liquidity, and a little bit of dollar volume or one individual cannot impact the price as significantly. If I take $100,000 and I market by Apple, I'm not going to do anything to the share price. If I take $100,000 and I market by a penny stock, I'm going to massively influence that share price. So it has everything to do with how many orders, how much volume is at play in the order books.
What do you think of Bitcoin liquidity? Is it still very liquid or not?
It's definitely improving very significantly. I mean, the dollar volume that we're seeing is continuing to increase as more and more institutions come into play. If we look back when the price was trading down in the single thousand digits, there were days where here on Coinbase, the price was in the $9,000 range and we traded 10,000 coins. And I now look at what we're doing today or yesterday. Yesterday was 25,000 coins. So not only is it 150% more volume, but the price level matters as well. It's 150% more volume at a price point that is 500% more than it was back then. So you're just seeing exponentially more dollar volume traded, and that is leading to a lot more liquidity.
Got you. So would you say wicks are red flags or green flags, or how can we use, when we see big wicks in either direction, what does that tell us in a very simple way?
So if it's happening a lot, if it's happening often, that tells me there's a lack of liquidity on the exchange. And for me, that's just a red flag that I either don't want to be trading that coin or I don't want to be trading on that exchange. If you see a wick on like a one-time event on a liquid coin, I know Bitcoin is liquid. I know there's a lot of dollar volume. So if I see a wick on Bitcoin, that tells me, again, looking back at this drop from a few days ago, okay, we had a big drop. I know that anybody that was using stop losses based off of these supports, we had a double bottom here. This is market sells triggering stop losses as well. Anybody that had a stop loss at that level was stopped out. And then we saw the lower wick showing us that bulls are buying that dip. So again, if it's something that's not happening on a daily basis, if it's happening, once a week or every few weeks, then I just know it's showing me a surge in volume and volatility in that market environment. But again, if it's happening every single day, that's showing me that it's just consistent and there's a lack of volume and liquidity on that exchange, on that coin.
So I only knew half of that answer, believe it or not. I never thought about the non-liquid on certain exchanges and how that could be negative. So this has been very educational for me. Now, as you know, Dan, I have an American AM staff. He actually collects Dogecoin. He loves Dogecoin. He has his own donations thing in the description down below as well. He would love you to do technical analysis on Dogecoin.
Sure thing. I have friends that are interested in this as well. And, I don't mind that it's a meme coin as long as people understand what they are, investing or trading in. But I have friends that have come to me and have taken my free technical analysis course because this has gotten their attention. So I know that
So it's a good thing for crypto.
Yeah, it's a potential stepping stone to get them interested in markets in general. So in that instance, it's a good thing. But what I'm looking at is
Elon Musk bought it.
I know, and he's driving the sentiment for sure. But we had our high that was hit, and we then pulled back. And what stands out to me on this chart is a lower high every single day. So we hit our high. The next day was a lower high. Next day was a lower high. Again. So day after day, this ended up being 11 days in a row with a lower high every single day. What happens when that pattern breaks? The bulls show up, and it's a shift in momentum. We had a low of 475. We kept the pattern of a lower high every day. We did not break 475, and it's just the scales tilting. Again, supply and demand. I know there is a greater supply of coins being sold than there is demand for coins being bought during this 13-day period or 11-day period. Then you hit this support level and the scales tilt. Suddenly, we have run out of sellers and the buyers are now outweighing the sellers. And as soon as that pattern breaks of the lower high every day, and that broke when 5.5 cents broke, that's the move and the reaction that you see. So this is it on the hourly time frame. And again, just a surge in volume. Here's your equilibrium. So the tightening range of higher lows and lower highs. And that's what happens when you see volume dropping off, the range is tightening, and there's your break, spike in volume, and essentially tilt in the scales where now demand is outweighing supply. The question is, how long is that going to last? I am going to anticipate that the most likely scenario, due to the size of this pullback, is that we are going to form a daily lower high compared to 8.8. And again, what the bulls have to be really cautious of, the last thing a bull wants to see is an inability to break that resistance and then a break of the low. So I now know that the most important support level is this base down in the 4.7s. And if that level breaks from here, we would confirm a daily downtrend. So that's a must-hold level from here on out.
So would you say it's a good buy right now, or, unless it breaks that daily, or do you think it's a bit too late to get in right now?
Missed the buy. The buy would have been on that equilibrium breaking bullish or on the pattern of a lower high every single day breaking. So a buy on that 5.5 cent break, again, just a pattern of 11 days in a row. As soon as that pattern breaks, if you make an entry, obviously you're in a profitable position at this point. But I personally wouldn't want to be a buyer after that break has already taken place. I want to be a buyer as a part of this surge in the bull volume, and I don't want to be buying after that. Doesn't mean we can't go up from here. It's, again, just all about risk and reward. If I'm making an entry on a 5.5 cent bull break and my stop is under 4.75, it's a lot better risk and reward than if I'm now buying up 10% higher than what would have already been the signal. And you'll come to realize as a trader that there is opportunity everywhere, every single day. So if I look at this chart and say, I missed the move, that was the signal, 5.5 cents breaking. I can just say, okay, well, I missed it. I wasn't ready for that move. And rather than chasing it, I'm just going to sit patiently because I know there's another opportunity not far away at all, whether it's on Dogecoin or on a different coin, there's always another opportunity.
Yeah, but what about Muskamentals for Dogecoin?
Yeah, he's helping it. I mean, there's definitely the possible bullish scenario where one tweet leads to an increase in price.
All right, so really fast is saying one more, please. And I'm going to ask you that last question. What about Civic? I don't hear anybody saying anything about it. On a chart point of view, technical analysis point of view, obviously. We'll see what we can do.
CVC.
And this was a big player back in the day. I remember people going nuts for Civic and identity on the blockchain back in the day.
So it's an uptrend on the daily. It's definitely, here's a move where I would be starting to scout a bullish entry, because you hit your top, you pull back for days, you try and establish a support level. I can see we drop down and hit a support of 39. And then I can see we drop down again and 39 held. So it's now essentially a double bottom. So what I want to see after that double bottom is a trend change on the 4-hour time frame back to the bulls. So let's just go over this 4-hour chart and the downtrend that we were in. So we topped out, lower high, lower low, lower high, lower low, or actually double bottom, lower high, higher low. And if we break 457, we confirm a 4-hour trend change. And a break of 457 would confirm our daily higher low is set. It would confirm that 39 cents is now our most important support level. And then we would watch for a potential lower high compared to 597, because we did pull back significantly, and just watching for that base of support. So if I want to make an entry here, I can use one of two levels. I can use that 39-cent double bottom. If I want less risk, I can use this low of 419, because if my thesis is going to be correct, that our daily higher low is being established, that 419 level needs to hold, and we must break 457 from there, because if we do not, the 4-hour downtrend just continues, and we're going to head back to 39 cents if 419 breaks.
What's a good target like to take profits on this, short term and long term?
So if I'm looking at this chart and if I'm making an entry on a daily high or low, again, I anticipate that the most likely scenario is a daily lower high compared to where we came from at 597. The only way that we're going to head straight to a higher high is if we see massive volume like we did the last time around. So I'd be keeping an eye on volume, but in the absence of volume, let's say I make a good entry and we change the 4-hour trend, I then look to scale out some of my position. So let's just say hypothetically, I'm in at 441, my stop is under 419, and we bull break 457. I would exit half of my position, let's say at 48, if I want to be a bit protective. So if I enter at 441 and I exit half at 48, my break even on that trade is now just over 40 cents. And that drops my risk considerably. I love scaling in and out of positions. It keeps me in control of the trades. So I would be looking for a partial exit, selling into some of this strength to ensure that if the worst case for the bulls happens, where we set our higher low, we fail to break resistance, and we confirm a daily downtrend, because I sold half into that bounce, I am then on the hook for much less of my capital being at risk. So as a more conservative-minded trader, I do look to exit half of my position into strength to ensure keeping control of the trade.
Now, if somebody was in a more longer mindset, a hodler, for example, somebody likes hodling cryptocurrencies through a bull market, would you say it's a good way to get back some of his investments and just let the rest ride, kind of thing?
Absolutely. I do that often as well. If we're seeing Bitcoin dump down, let's just go back to this Bitcoin example on that hourly oversold bounce, which ended up being the best entry anytime in the last few days. First hourly oversold conditions. If I'm playing that bounce, let's say I make an entry, I'm not going to nail the bottom. Let's say I make an entry at 46,000, low 46, and I sell half at 47. My break even is now 45, and I can just let that half position ride as long as I want. And obviously it would have gone very well if I would have done that. So by taking partial profit, that also allows me to let the trade play out a little bit longer than I normally otherwise would, because again, I already took some profit. I'm very comfortable with where my break even is. Let's see what the bulls can do with it.
Do you use leverage?
I do not. I have never used leverage in the cryptocurrency space. I was very fortunate to enter the market right as the 2017 bull move was taking place. So that provided enough capital for me where I don't have a reason to be using leverage at this point.
Awesome. All right. So you look at charts all day. You are on charts all day. You see charts in your sleep. You have charts on your wall. You have charts everywhere. What three projects would you say are the best technical setups right now for people to get in the cryptocurrency world?
Oh, geez. Well,
Off your head, because
I
I know you're on charts all day. I mean,
as
you're
far as cryptocurrency is concerned, to be completely honest, I am cautious at these levels. I look at a chart like ETH and I see we're at all-time highs. Yeah, absolutely. But I also see the last time we saw weekly consolidation was at $500. So if you've run 300, 400 plus percent since the last time you saw longer term consolidation, I don't like entries up at that level. I don't like the risk and reward. So names that have been running significantly, I would have to patiently be waiting for weekly consolidation. Next time ETH sees weekly consolidation, I am a buyer. Absolutely. I'm looking for that higher low. I'm looking to make an entry, and I'm watching that weekly EMA 12, which has been holding for many months. So that'll be a potential visual target to be watching once we do top out. But I'm not entering up here, to be completely honest. If I were going to enter anything, it would be coins that have not run nearly as significantly. But I would have to be aware that, obviously, if Bitcoin were to see some pullback, that would hurt those coins as well. So as far as your best bang for your buck in risk and reward, I would say be patiently waiting in cash, as hard as that is, because entering up at these levels, not ideal.
would you be getting out as a hodl position if it's a long-term hodl position?
No, I have exited my swing positions, my day trading and swing positions. My no touch position means no touch. I'm not exiting. We could pull back 30%. I'm going to sit through it, and I've fully accepted that already. But as far as my shorter term positions, yes, I have a lot of cash now at these levels, and I know I'm not going to nail the top. We can go up another, ETH can break 2000 and it can go without me. And that's perfectly fine. But I know that I will not be comfortable buying into any swing trade positions until weekly consolidation takes place at these levels.
All right, three coins most promising of the year on your technical analysis that you have looked at for the past year or so. I don't know. Like what would you say are the most bullish scenarios in general?
I've been liking the Link setup for a long time. It's been performing very well, all-time highs. They've got a core of very diehard Link Marines
Yeah.
on social media that follow them around. Binance before this move, I certainly would have suggested, because Binance and Link were very correlated for a while. They were leaders for a while, and then they just fell off and they did nothing. And Binance was doing nothing. Just 4 weeks ago, it was doing nothing while the Bitcoin was running really hard, and it played catch up and it played the laggard in a big way. So I like Bitcoin, ETH, BNB, Link as key names. But again, entries at these levels after running this significantly definitely I would suggest more patience, which is not the fun answer. It's not fun
Yeah.
and exciting, but if you want to keep your money, that's definitely the way to do it.
One last question that I got from the audience from Hussein, and he's a subscriber. He's always on, so I want to ask: Paid network.
Paid network. That's a coin. I've never heard of it.
It is a coin,
Oh, there it is. Paid.
but it looks like it's wrapped ETH. No.
Yeah, that's the only pairing we got. So we don't have much price history to be going off of at all. Oftentimes on charts, you'll see this big upper wick, and that just really screws up because I can't see
Yeah.
anything. So I have to zoom in. So I can see a 4-hour uptrend, and I can see that the most important support level for me is down at 00226. There's a little base of support here, 00223, 224, 226. So that's the most important support level if the bulls are going to maintain this uptrend. Higher low, higher high, higher low, higher high. So on this pullback, as long as we hold that level and set another higher low compared to that level, bulls keep control of that uptrend. But again, these upper wicks being so consistent, they show me that there's not a ton of liquidity on this coin.
Got you. Okay, do you want to exit your screen and just go into full thingy bobby?
Full face mode.
Full thingy bobby. I call it thingy bobby. It's just easier. All right, man. So thank you so much. Let me ask, if somebody wants to learn technical analysis, I know you have a course. I do have it linked down below with your indicator. Do you want to talk about this for a little bit?
So yeah, we also have an indicator system. I mean, step one is learning technical analysis, because the alerts that we have aren't going to be very useful unless you know how to use them. But it's an alert system. It's called Trader Pro, TRADR Pro.com. And it just alerts when certain conditions are taking place. You know, just as an example, my favorite alert is what we call a oversold climax alert, or it looks at multiple time frames and multiple factors. It looks at the volume, it looks at the RSI, and when certain conditions that give higher probability scenarios align, it shoots out an email or a text message, however you want to receive it. And it's just a way where if you can't be staring at the screen all day, you know, we have one guy, Toby, who has been running the project, and he was in line at the grocery store and his alert went off and he made a trade and paid for his groceries while he was in line. And I think that's the coolest story, because again, he wasn't ready for the trade, but he knows what the alert means when he gets it. And it's not just buy and sell alerts. You know, we're not spoon feeding you buy now, sell now. So again, you have to know what the alerts mean to a certain degree to utilize them, but it is useful for when your eyes are not glued to the charts.
And as for technical analysis, we were talking about it before, how long it takes. I can teach you the theory and technicals of how to drive in a day or two. It doesn't mean you can go out there and drive. How long do you think it would take, like, someone to get really serious in technical analysis? Maybe a year or two?
Years, yeah, definitely.
Yeah.
And you're exactly right. You know, the book learning is the easy part. Most of us went to school and we learned how to book learn, but we have not learned how to completely control our emotions. And that is the tricky part. Knowing, you know, when you feel fear gripping you by your intestines and knowing how to act cool, calm, and collected, you can't read that in a book. You have to experience it and you have to recognize that. And that is what takes the most time, not the book learning.
And when to break the rules. When to counter steer, and you know, sort of like it's crazy, right? And a lot of people think it's a long time, but if you think about it takes 8 years to be a lawyer, 6 years to be kind of a doctor, and in 2 years, 1 or 2 years, you can not only learn technical analysis, but you could be making more money than both of them combined.
And that's why I hate when people say, oh, you know, X% of traders fail. Well, it's like, who are you counting? Are you counting people that, you know, try for a week and fail? Like, obviously they're going to fail. Give me the stats of people that have put in 3 years and show me how many of them are successful and how many fail. And we don't have that data. It doesn't exist out there. No one's compiled it, but you have to take it seriously. It's a profession like anything else.
And on that note, I want to thank you so much, Dan, for being on the channel again. I hope to have you back soon again. And thank you so much. I really appreciate you. I've learned a lot from you.
Absolutely, Paul. Thanks for having me. It was a blast.
All right. Thank you if you're watching this. Subscribe to Dan. Subscribe down here in this channel if you like these kind of videos. And I'll see you in the next one. Bye-bye.